Good afternoon. I'm Mickey Fulp, the Mercenary Geologist. You can reach me at contact@mercenarygeologist.com. Website, same old thing. Twitter @mercenarygeo with currently 49,800 Twitter followers. I'm not a certified financial advisor. Nothing I say here today can be construed as investment advice. I've been asked by PDAC, luckily for the 14th year in a row, the Newsletter Writers Forum, to speak about my base and specialty metals outlook for 2021. We'll start with base metals, and I plotted over the course of the last year normalized price charts for copper in green, nickel in black, and zinc in blue, and you can see that every metal follows copper. Except zinc, which dropped off at the end of the last couple of months because of high inventories. This is Base Metal Fundamentals 101. Copper leads the way, both in demand and prices. And that makes sense because there's a reason it's called Dr. Copper. It is a world leading economic indicator, economic health of the world. Other big base metals follow, as you've seen for nickel and zinc. Copper prices, supply demand and demand fundamentally driven for the mid and long term. Net longs and shorts, futures and option market determine oftentimes near-term price trends. Copper usage, there's a reason that it's Dr. Copper. Since 1900, 120 years, the annual growth rate is compound annual growth rate, that is 3.2% more copper used every year on average. And not only is the world using more copper and there are more people in the world, but if you look at this rather complicated chart, we go from 2.7 billion people on the planet in 1950 to 7.6 billion people in 2020. And so people need electricity. And not only that, but our average use per person in the world has increased over this period of time from about 1.4 kilograms per person per year to now approaching 3.3. So we more than doubled person use. Let's now segue to the size of these markets. Copper, 20 million tons a year, zinc, 12 million tons, even poor little nickel at 2,500 tons per year. And then look at the size of the specialty metal markets. Rare earths, about 10% of copper, 240,000 tons per year. Cobalt, 140,000 tons. Lithium, 86,000 tons. Vanadium, 86,000 tons. The latter four are the so-called electric metals, energy metals, critical minerals, strategic minerals, whatever you prefer to call them, but they are minor metals, and historically they are called specialty metals. Specialty metals always have price problems. Very volatile, low liquidity, small markets, low world demand and yearly production, supply chain controls are monopolies and oligopolies. China dominates rare earths, Zambia dominates cobalt, oligopoly, 5 companies worldwide control the lithium market. So you have, in the case of rare earths and vanadium, opaque spot and long-term contract prices. In the cases of cobalt and lithium, newly traded on world exchanges, very tiny, minuscule derivative markets, futures, options, spread bets, ETFs, etc. High prices are always short-lived. Cure for high prices, folks, is high prices. Because as soon as prices skyrocket, here come alternative sources, black market smuggling, recycling, substitution. We've seen this time and time again. We're going to go through 3 charts to show you how this happens. This is a 9-year chart for cobalt. You saw the spike to $44 a pound in early 2018. That died quickly. It's now back up to 20, but high prices are unsustainable. Same with lithium. This is not price per se, a price index, and we're half of what we were 2 years ago. Rare earth element prices, everybody remembers the spike in 2010, 2011. There was another spike in 2017. Market controlled by the Chinese. They set the prices depending on what geopolitical sway they want to have over the rest of the world. And finally, vanadium prices, 20-year chart, 3 spikes, short-lived, killed. The last one was killed, really started because 2 mines shut down in South Africa. There's only 3 standalone vanadium mines in the world. Energy Fuels comes in and starts producing byproduct vanadium from their mill at White Mesa, Utah, and that was the end of that. So if you're playing these stocks, folks, I much prefer base metal stocks. Beware of frogs masquerading as princes. If you're speculating in junior resource stocks, I run a free subscription email. Go to my website, click on the banner below my mugshot, sign up, and you get all my stock picks and my newsletter. Thank you very much for your time.